The idea that you can have a new tax bracket of 40% for the highest earners, are you seriously considering that?
Well, I'm not a big fan of doing that. I mean, we're the Republican Party and we're for tax reduction for everyone. So, I mean, that's a general principle that we always try to abide by.
There you go. Joining us now, Art Laffer, former Reagan economist, Steve Moore, host of More Money on WABC Radio, and both of them managed to write the Trump economic miracle without me. Steve Moore, Mike Johnson, he's a supply-sider, right? That's the Speaker of the House. And by the way, the Majority Leader, John Thune's been saying the same thing. They're not going to raise taxes. Republicans don't raise taxes.
So I think you may be declaring a premature victory here, Larry. I hope you are right, because I think it would be the worst thing in the world if these Republicans were to raise that rate, top rate. Remember, you were there when Trump cut the top rate from 40 down to 37%, and that helped. That was one of the key features of that great bill that you and Art Laffer helped put together for Donald Trump. The Republicans have not raised tax rates for 40 years, ever since Papa Bush did it in 1990 and paid a high price for it. I think, Arthur and Larry, it's bad politics and it's bad economics. You can ask Arthur about the economics. He wrote a whole book about this.
Yes, no, I agree. He wrote many books about this and taught us all. You give up on the Laffer curve, the Republicans always lose. But, you know, back in 2016, 2017, Mr. Trump was not opposed to slipping the top tax rate. We went through the same exercise. We really did. Stephen, you were part of all those meetings that we had with Steve Mnuchin and myself and others, and Arthur and so forth. So, I mean, I don't think he's not roaring into it, but I really like what Mike Johnson is doing. I mean, I think, Arthur, he's a good supply-sider. And, you know, Kevin Hassett said there's no chance this year, 100% chance there's no recession. And all these things could come together. I don't want to be Pollyannish, but, you know, you could get a big, beautiful bill with a big, beautiful tax cut in there and deregulation and so forth. The tariff story, I mean, Mr. Trump is being, in his own words, flexible about pausing and helping companies to move from offshore back to onshore. You really could be sowing the groundwork. That's probably not the right metaphor. Planting the seeds for a terrific economic boom, Arthur. You can't rule that out anyway.
No, you can't. It's going to be great. And that we are even talking about a tax rate increase on the top income earners is silly. Can you imagine that conversation appearing a month ago? It makes no sense whatsoever. Trump doesn't want to raise the highest tax rates, I don't believe. Trump wants lower tariffs, not higher tariffs. Trump wants deregulation. Trump loves Doge. He thinks it's great. And he just wants to get his hands on the Fed so we can get monetary policy. And that's coming up fairly soon, too. So I am very excited about what he's doing. Once these things clear the ground, clear the air. But, you know, Trump always shakes the tub whenever you think, ha, I can finally rest. Nope. He goes and shakes it again, doing something else. It's his style. It's his way of doing things. As a CEO of an international company, he loves free trade. And in fact, he loves lower taxes. And he's the greatest president ever. I just wish everyone wouldn't try to second guess him and try to figure out, well, he should be doing this, he should be doing that.
So there.
He's the president. No, we aren't. Yeah, let's get going with Trump and just back him and do it.
Steve Moore, Arthur mentioned the Fed. Is the Fed now part of the rebellion? You know, Ira Stahl's been writing some great stuff. Smart guy, writes for Substack. And he has this calliope of speakers, all these Reserve Bank presidents, some of whom were former Obama people. And they're like, oh, we're going to have high inflation. No, we're going to have a recession. I don't know. The inflation rate now, the year-on-year CPI is 2.4. It's coming down a lot faster than people thought. Is the Fed part of the rebellion? Should the Fed drop interest rates? Mr. Trump wants them to.
I don't know if they should lower interest rates right now, but I do know this, that the Fed has what I call growth phobia.
Yes.
They don't like growth.
Yes,
they think creating jobs and creating profits is something that makes inflation worse. And so I don't really understand the model, but apparently they have 300 PhDs over there in economics who actually believe growth causes inflation. You and Arthur taught me that's completely upside down.
Arthur, I was just doing some back-of-the-envelope calculation on tax cuts versus tariffs. with some of the pauses that are now in place, the tariff revenue is going to be 350 to 400 billion max. It may not get to that point, by the way, because of various elasticities of both supply and demand. But I'm building in, with all the existing tax cuts and the new tax cuts, I'm building in $5 trillion, and I'm throwing in another $1 trillion on deregulation, which probably understates it. But the point is, 400 billion revenues from tariffs versus 6 trillion stimulus incentives from tax cuts and deregulations, not even close. So I'll make this point again, get you to talk about it. Once again, I say people are obsessing about only one part of the plan. This the tax cuts and the deregulation that are going to be the biggest part of the plan. And if you say throw Doge in there, I'll throw another $1 trillion in for Doge, for heaven's sakes. That makes it an even bigger margin, Arthur. So, I mean, to me, you got the numbers are in favor of a continued economic expansion.
Yeah, they are. And if you raise tariffs, and if you really do it for any length of time, you're not going to get the revenue, Larry. Tariffs are one of the easiest ways to circumvent. It happens with each country doing the deals, and it's just very difficult to keep in track there. Having a low rate, 10% tariff, and then using income tax rate reductions, that would be great. All of this stuff works very much as long as we get economic growth, and tariffs don't stimulate growth. They really don't. Mm-hmm. Tax cuts stimulate growth. That's very true. What worries me right now, Larry, is the price of gold is going up and bond prices are going down, which means that people feel a sense of insecurity. You know, gold is the first refuge of the cautious, and that's the only thing that worries me out there is gold and interest rates. And interest rates going higher and gold going higher is really a problem.
Well,
Can I just add one thing to that?
Just on that point. No, Steve, you were talking about the falling dollar exchange rate. You using the DXY, which has six currencies. And it's true, the dollar has fallen against the euro and the yen. Okay, but if you use a broad, the Federal Reserve has a broad currency measure that has 27 currencies. Can we put it back on the screen? Because we put it up prematurely. Put it back on the screen. This is from Joe Livornia. Inflation-adjusted, trade-weighted dollar index, again, 27 currencies. It's the broadest measure. The dollar is slightly lower. It's slightly off a 40-year high. So I don't know. I wouldn't react too much. And bond rates have been in a trading range. You know, part of the bond problem is banks are not free to come in and stabilize the market because of the capital requirements. I mean, the leveraged capital problems, and hopefully that'll get changed. I know these things are out there, and I know there's uncertainty. I don't disagree. But geez, I don't know. I wouldn't fret about too much.
Can I just make one point, Larry?
Last point.
I agree with you. I mean, the numbers are getting better on the dollar. What concerns me, you got to talk to our old friends at the White House. There are some, and I'm not going to mention names, who are saying they want a weaker dollar. And I don't understand the logic of that.
No, it's not true.
You taught me king dollar.
Yes, I want king dollar. And
king dollar.
Everyone picks on Steve Myron, the new CEA chair, who wrote an academic paper a couple years ago. He just gave a speech, and in the Q&A, he said his views. First of all, he's not campaigning to end the world's reserve currency, and second of all, it's not the policy of the administration. He was very clear about that. Good. So these hypotheticals are very hypothetical. How about that? And we don't like hypotheticals. Art Laffer, got to jump. Steve Moore, thank you, gentlemen.